Do you have a problem understanding Fibonacci levels? If you do, listen up. I've got some great information and, of course, news about the upcoming US election. So let's get into it. Hi Forex traders, Andrew Mitchem here, the owner of the Forex Trading Coach. In today's video and podcast, which is number 202, I want to talk about difficulties about trading with Fibonacci levels. And of course, next week we have the long anticipated, and really at this stage, who knows what the outcome is going to be, the US election. So let's talk about the trading side of things first and Fibonacci levels. Last week I said at the end of the video and podcast, drop me an email with questions that you have about your trading, and an overwhelming majority of people, a huge number of people wrote and said, Andrew, can you help us with understanding Fib levels, Fibonacci levels? I'm not going to explain the whole what are the Fibs, how they're calculated. You can find that all online elsewhere. But the big problem that I found years ago when I started trading with Fibs is they work beautifully in hindsight. A little bit like Elliott waves. If you have tried Elliott waves, you can see them all plotted on your charts, extensions and retracements and waves, etc. Whichever you traded, Fib levels or Elliott wave, and you can see it all in hindsight because you know exactly where to draw your levels from and to, and brilliant in hindsight, absolutely wonderful. But the problem that I found anyway is that in real time, I just didn't know where I was drawing levels. You know, am I at a swing high now, or like maybe a couple bars later I might be at a new swing high, so therefore my levels are wrong. And to me it was an absolute nightmare. I found it real difficult, although I liked the concept. In reality, and trading from the right hand side of the chart, making the decision right now as the market's moving up and down, I found it virtually impossible to trade either of those two principles. But as you know, if you've been trading for a long period of time, a huge number of technical traders and big institutions, big banks, etc., they do use Fibonacci levels. So I was determined to try and find a better way of trading that suited me using Fib levels all those years ago. And today when I found something that worked, I still trade exactly the same way today. And that's exactly how I help and teach my coaching clients, using the way that I have discovered and found Fibonacci levels work for me. So what I love about Fib levels, the way that I use them is that they give me a fantastic retracement entry. So it means I'm buying below the current price or selling above the current price. So I'm using limit orders, buy limits or sell limits. What that does is if the price retraces to my entry level, it gives me a far greater reward to risk on my trade. Rather than just jumping in straight away on the close of a candle at the market, I'm waiting, let's say I'm buying, rather than jumping in up here, I'm waiting for the price to retrace to a set level using my Fibonacci levels. If the price retraces there, the market automatically fills my trade. I'm not sitting there waiting for that price to happen. It fills me at that level, so it gets me in at a better price. And then at that point, if I'm buying, I'm anticipating that after the market's pulled back, it's then going to turn around fairly shortly after I've taken that trade and then start heading up again. So it means that I can have relatively small stop losses. And because I've got in at a better price than I would have straight away at the market, it means that my reward to risk becomes better, which means that I don't actually need to have a win rate quite so good because my reward to risk is good. So I use the Fibonacci levels and certain levels that are all covered in great detail in my coaching course that I teach to my clients. And I explain every day on my daily trading suggestions. I'm using a Fib level for an entry, I'm using it for a stop loss, and I'm using it as an extension for my profit target. So there's no guessing involved then when it comes to setting those important levels. I know my profit target is going to be at this certain extension level on all of my trades. So I'm not thinking, oh, where do I need to put my profit target, and should it be here or should it be there, or I'm not quite sure. You know, none of that comes into it. I have set levels that are real, like simple and easy to place and to understand. And it is absolutely remarkable how often the price respects those levels that I use. It just blows me away. And of course it doesn't happen on all trades. You know, it'd be silly to say it's going to happen on all trades. It does not. But it's a huge number of trades where you see the price will retrace, it will get you in, and then it will turn around not long after, either right on that point or not long after. And another great thing is your drawdowns are kept very, very small on most trades, because it's remarkable how often the price does retrace once the trade gets filled. And another benefit is it can be used across, or this principle that I use in trade can be used across any time frame chart. Personally, I use it on the 4-hour charts and higher, the slightly longer time frame charts, and across any currency pairs. So it really is a very simple, highly effective way of using Fibonacci levels to benefit your trading. If you'd like to know more about that, just get in touch with me. And really the only true way of using that information is to jump on to my course. If you would like to know more, send me an email and I can get details through to you. So number 2 topic for today, of course, it's the good old US election next week. Really it's 50-50 right now who's going to win, whether it's Hilary or whether it's Don. Who knows which way it's going to be. It's going to be quite interesting. A lot of the brokers, of course, are just giving you a bit of a warning to say just be careful with your trading. They're going to sort of have a few restrictions on most trading accounts over the next couple of days. So don't be in a hurry to sort of have too many positions open on your account, probably Tuesday, Wednesday, even Thursday of next week. Just be real cautious with that news event. Because it is so close, it might be one of those events as a trader, you just sit out of the market, let the market do its thing. Yes, you could make a lot of money or you could lose a lot of money. It's a bit like the Brexit thing. You know, you've got to be real careful when you're trading those massive news announcements. So the easiest answer for most people, when the logical answer, sensible answer, maybe just give trading a break for a few days, or just be real careful and watch those trades if you have any open at that time. So by this time next week, we'll know whether it's Hilary or whether it's Don who's in charge. Look forward to talking about that and more this time next week. Have a great weekend. This is Andrew Mitchem, the Forex Trading Coach.